This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil futures dropped from their highest levels in weeks on Monday, pressured by weaker-than-expected consumer spending in China, the world's largest oil importer. Brent crude futures fell 60 cents, or 0.81%, to $73.89 a barrel by 10:43 GMT after settling on Friday at their highest since November 22. U.S. West Texas Intermediate crude dropped by 70 cents, or 0.98%, to $70.59 after registering its highest close since November 7 in the previous session. Chinese industrial output growth quickened slightly in November, but retail sales were weaker than expected, keeping pressure on Beijing to ramp up stimulus for a fragile economy facing U.S. trade tariffs under a second Trump administration.
China's refinery throughput in November recorded its first rise in 8 months, official data showed on Monday, as Beijing's economic stimulus measures began to underpin manufacturing activity and oil demand. Refiners processed 58.51 million metric tons of crude oil last month, data from the National Bureau of Statistics showed, equivalent to 14.24 million barrels per day, BPD. That marked a yearly increase of 0.2%, snapping a series of consecutive declines since April. It was also up from October's 14.02 million barrels of oil per day.
Moving on to the top news in the energy sector.
China's coal output rose to a record daily high in November, data from the Statistics Bureau showed on Monday, setting the world's largest coal industry on track for another record year. China mined 427.98 million metric tons last month, according to the National Bureau of Statistics. Average daily production in November was 14.27 million tons, the highest level on record. By comparison, average daily output was 13.28 million tons in October and 13.82 million the month before that.
Oil and gas companies operating in Norway expect to invest a record 275 billion Norwegian crowns, $24.68 billion, in 2025. Up from 263.7 billion this year and more than previously expected, the Offshore Norge Industry Association said on Monday. The industry group had 1 year ago predicted oil and gas investments for 2024 and 2025 would amount to 240 billion and 225.9 billion crowns, respectively. The higher investment is being driven by a mix of cost inflation, accelerated development and increased scope of work at several fields and the drilling of extra wells at existing oil and gas fields, Offshore Norge said. Next, we have the top news in metal markets. China's crude steel output in November fell 4.3% from October, official data showed on Monday, dampened by tighter margins and seasonally weakening downstream steel consumption. The world's largest steel manufacturer produced 78.4 million metric tons of crude steel last month, down from 81.88 million tons in October, data from the National Bureau of Statistics showed. That suggested average daily output of about 2.61 million tons, compared with 2.64 million tons in October and 2.54 million tons in November 2023, according to Reuters calculations based on the data.
Aluminium prices in London fell on Monday, under pressure from rising output in China and challenges to the country's economy and consumption as Beijing braces for more U.S. trade tariffs under a second Donald Trump administration. 3-month aluminium on the London Metal Exchange, LME, was down 0.7% at $2,585.50 by 11:22 GMT. Aluminium output in China, the world's biggest producer of the metal, rose 3.6% from a year earlier in November, while the country's industrial output grew ahead of expectations.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures closed lower on Monday for a second straight session, giving up its midday gains following losses in rival soyoils, although a weaker ringgit limited losses. The Bursa Malaysia Derivatives Exchange's benchmark contract fell 1.2% to 4,758 ringgit, $1,069.21, a metric ton at the close. The contract fell more than 4% last week. Crude palm oil futures had opened lower and recovered earlier at the midday break on bargain buying following the steadiness seen in competing oils, especially soy oil and rapeseed oil, said Anil Kumar Bagani, commodity research head at Mumbai-based Sunvan Group.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.